Bears were vicious today. Thursday, January 13, 2022. Welcome back. Terrible day if you're long. Let's look at the charts. S&P 500. This is a daily chart. And today I got stopped out of my position. My stop loss was placed right below that 50-day moving average. And I got stopped out. So liquidated my position. Price action for today was very bearish. Open higher. Try to push above that level we talked about, the previous all-time high. Couldn't do it and sold off basically all day long, dipping, dropping below all these moving averages and major support levels. So that is very bearish. Reason why I liquidated my position. Levels for tomorrow will be support all the way down here. If we get that far, I don't know, we'll see. Resistance will be all these moving averages right here and up here. Path of least resistance is definitely south, but we're still very close to the 50-day moving average, so we can easily gap up tomorrow up here and push higher. Very unlikely though. I think more likely to go down than up. Another level of support would be 4600 and this moving average right here, the 100. And now that I think about it, we're not that far away. Can easily do it in a day or two. Let's now take a look at the Nasdaq 100, same as the S&P 500. Big sell-off, breaking, dipping below moving averages and support levels. We're back to the same spot as the last few weeks. That this level here, which is around 15,500. We were here, wherever you see those green circles, and here. Question is, are we bouncing up from here or are we going much lower and actually this time touch the 200-day moving average? We'll see. I got stopped out of my position today. As I specified in my previous video, my stop loss was placed below the 100-day moving average, so I got stopped out right here, right around that area. So I do not have any shares now. I'm not looking for a short setup, I'm not looking for a long setup. I'm just going to watch it and see where the next opportunity is, to the long side or to the short side. Resistance, lots of resistance overhead. Path of least resistance is south, and I don't really see much major support here. I see it here, a little there, but not until we get to the 200-day moving average, which is this green line here. Looking at the Dow Jones, still in an uptrend, stuck between all these moving averages, very close to new all-time highs, still above the 20, the 50, but the rest of the market of the other indices are doing not very well, so I would expect this one to follow to the downside, but still looks good as long as it can stay above that 50-day moving average. Let's look at the Philadelphia Semiconductor Index. This one was very negative day, very bearish, big gap up. It just couldn't stay up there and dip lower, dipping below major support levels and all these moving averages, closing below the 50-day moving average. At support 3,800, breaks below that level. The next support would be this one down here, right under 3,700, which has been support for the last couple of months. If this one doesn't hold this level here, it can quickly drop down to this level. But if it was able to dip below these moving averages, it can also do the same thing to the upside. Maybe tomorrow, maybe not, we'll see. Does it look bearish? Just the fact that it closed below all these moving averages, yes, but still not too far away from new all-time highs. Small caps, IWM, ETF for Russell 2000 has really not done anything. It's still stuck between 226 and 210. Below all these moving averages, lots of resistance. Path of this resistance is to the downside around 210, breaks below 210, and it can get very ugly very quickly, as it has been support for the last few months. This has been the weakest of all the indices. Since the bounce 3 days ago, all the other indices were able to capture or get above short-term moving averages, but this one, it didn't, and remains the weakest index. I hope you guys learned something today. Good luck trading tomorrow.